Rocking the markets this week. The yield on the U.S. 10-year yield sinking to 2.14%, its lowest level since September 2017 as the S&P 500 closed out its longest weekly losing streak in 5 years. The rate shock coming as no surprise to Carter Worth, who actually called for it earlier this year.
Ultimately, I think that after toying with these tops and ever so slightly breaking out and pivoting down, that we are going to make our way higher. I like TLT on the long side here. I think this is a good bet. I'm in the camp, in fact, that yields are going as low as 2.1% on the 10-year.
Prescient call. So what comes next? Carter's at the plasma breaking it down. Carter.
All right, so we got to, what do we have? I think like 2.12 today, so we're effectively there. There's a slight unfilled gap down a little bit lower, 2.07. But tactically, we've come a long way, and I think you can probably play this the other way, which is to say, trim, take profits in TLT. 10-year yield, all data chart going back to the 60s. Let's draw the lines. It's a very precise line, interestingly, and yields failed. It's one of the reasons to try to make a bet against it. Yields failed precisely. They got here precisely, and they failed. That was the entire point of making the bet that they would stop. Now, the 2% level is effectively the midpoint of all of this. And at this point, I think you've got the prospects of, again, a little bit of mean reversion. So here's the 10-year yield chart. And what we know is that it's had some pretty big rebounds, 25 basis points, 27 basis points. And the sequence, if you will, would call for something along those lines here. Now, does it have to start here? Could it start from actually 2.07 or a little bit lower? But we are sort of oversold, overdone, if you will, and I think you get that sort of bounce coming up here. So the reciprocal, of course, is TLT. We know it was a great breakout from the tops, but the issue is having broken out from those tops, yes, or having completed the head and shoulders bottom, or, frankly, having, to some extent, done your cup and handle. At this point, I would think you get a pullback. And so the betting here is that after some pretty good gains to TLT, that you've got this kind of potential.
All right. Well, Mike is out in San Francisco today. Mike, what do you think of Carter's call?
Yeah, well, obviously, he had a great call earlier this year. I mean, we heard that from a couple of quarters. It's interesting. We began the year basically with the general understanding that the longer rates were going to go higher. And now it seems like universally the view is that they're going to go lower. And I think when everybody is looking for rates to descend, that might actually mean that they've descended as far as they're about to. And we'll also remember that it was about 3 weeks ago that Jeff Gundlach was talking about the fact that options were very cheap on TLT. He actually was talking about being a straddle buyer. We talked about that, I think, 3 weeks ago, the August 125 straddle. Obviously, we've seen a very sharp move. That straddle, which was about $5, is now about $7.50. But still, the price of options remains relatively cheap. So two things I would say. Number one, if you had that straddle on, you definitely want to take the call leg off, or at the very least, roll it up. But my view is to go along with Carter here, make a bearish bet on TLT, which is bullish on the rate side, especially after John Williams' comments where he was basically saying, don't worry about keeping your powder dry. Lower for longer, be very aggressive. And obviously, if we do see that, if we do see some aggressiveness from the Fed, basically in monetary policy, that could basically steepen the term structure, basically, of yield. So what I would do here is just look out to August. The 130 puts were trading for about $2. I think that's an inexpensive bet right here. And one of the things we can notice from TLT is that when it starts to move in a single direction, it sort of goes that way for a little while. We're trying to take advantage of that. And I think that's the way you want to make a play right now that TLT could fall.
Dan, what do you think of the call and the trade?
I look at his cup and handle, and that looks like an amazing breakout to me. And if you think of the momentum it has, and then you kind of put together the fact that options are really cheap in it, I almost take the other side and say I think you could have a continuation of that breakout, and the TLT could get back to 140 where it got to back in 2016. But that's here nor there. I don't.
Well, that's important. It's just that how you get there. I mean, ultimately, what we know is that in the next recession, we're going to 1%. We could go negative like the rest of Europe. The Fed could start buying stocks like the Bank of Japan. But the point is, the day-to-day angle is a bit much, right?
Yeah,
Even
Steve,
if you go to 140, you don't go there like this. This is where you flag, you pull back.
It's interesting, though. I think back to the last time that the TLT was trading above 130. What did we have? We had crude collapsing. We had safe haven assets like U.S. Treasuries. We had the Dixie. The dollar index was bid. We know that's bid right now. We know that crude's collapsing. I say to myself, this could be a kind of messy summer if we don't have any resolution to all these trade things going on. And I think you're going to continue to see crowding in U.S. Treasuries or the dollar.
I guess the difference, though, would be in the timing. I mean, directionally, longer term, right? You think that yields will go lower.
Listen, if that was a stock,
but shorter term, you might agree with these guys.
I might. Listen.
Like if that were stock we were playing for a breakout, right? Yeah. And we put an option, we would harvest that, right? Or we'd roll down or roll out.
Well, here's the good news about Mike's trade, okay? Like literally, it was trading at his break even at 128 like 3 sessions ago, and so vol is cheap enough, options are cheap enough that if you get that move, you're going to have an opportunity to do something, spread those, that sort of thing, and kind of like you say, harvest or lock in some of those gains on a very near-term basis.
Mike, last word.
Yeah, I think what Dan just said is a really good point, too. On these types of trades, whether you're making a bullish bet or a bearish one, you really have to take a look at rolling those situations when you do start seeing those trades get into the money. So like those 125 calls, you want to adjust that. And if you're making this bearish bet now, you're going to want to adjust it if we do see TLT fall back down to that 125 level.